Nvidia is sitting around $204 right now, and Wall Street has a 12-month price target of over $298. That's nearly 45% upside. But here's the question nobody is asking. Is this the right price to buy in? Or are you walking into a trap? Stay with me, because in the next 4 minutes, I'm going to show you the forecast, the best entry zones, and two strategies, one for income, one for growth, that I'm personally using on NVDA right now. Let's start with the fundamentals, because this is what separates serious investors from people just chasing hype. Nvidia just closed fiscal year 2026 with $215.94 billion in revenue. That is a 65% increase over the previous year. Let that sink in. A company this size growing 65%. Their earnings came in at $120 billion. Their EBITDA margin is sitting at 61.7%. Last quarter alone, Q1 FY27, they reported $81.6 billion in revenue, beating estimates by nearly $3 billion. EPS came in at $1.87, beating estimates of $1.75. Next earnings? August 26, 2026. Mark that date. That's your next major catalyst. Jensen Huang was just in South Korea signing deals with LG Group for humanoid robots and data center architecture. Countries are now fighting over priority supply of their next-gen Vera Rubin chips. This is not a hype stock. This is infrastructure. Now let's talk about what Wall Street actually thinks. 62 analysts cover this stock. The consensus? Strong buy. The 12-month average price target is $298 to $311. That's 45 to 54% upside from today's price of $204. Bear case, $180, limited downside. Base case, $298, 45% upside. Bull case, $350 to $500 if AI spending accelerates. This is about as lopsided a risk-reward setup as you'll find in a mega-cap stock. Now, when do I buy? NVDA's 52-week range is $140 to $236. We're at $204 right now. Zone 1, $195 to $205. We're here right now. Reasonable entry for long-term investors. Zone 2, $180 to $190. A dip entry with strong support. Buy aggressively here. Zone 3, $155 to $165. Dream entry. Unlikely, but if it happens, back up the truck. My approach? Scale in. Buy a third now, a third on a pullback to $185, keep the rest as dry powder. Strategy 1. The covered call. This is my favorite income strategy on a stock I want to hold long-term. Buy 100 shares of NVDA at $204. That's $20,400. Sell one covered call at the $220 strike, 30 to 45 days out. Collect $300 to $500 in premium. If NVDA stays below $220, you keep the premium and repeat. If it rises above $220, shares get called away. You still made $16 per share in gains plus the premium. Run this every 30 to 45 days, and you're looking at 15 to 25% annualized income yield on top of any stock appreciation. Strategy 2. Leaps. This one is for the growth investor. Buy one NVDA Leaps call at the $220 strike, expiring January 2028. Cost: $3,000 to $4,000. Instead of putting up $20,400 for 100 shares, you control the same exposure for a fraction of the cost. If NVDA hits $298 by mid-2027, your leaps could be worth $7,000 to $9,000. That's 100 to 150% return versus 45% on the stock. The risk. If NVDA stays below $220 by expiry, you lose the premium. Only use capital you can afford to lose. So here's my final take. Fundamentals are bulletproof. 65% revenue growth. 62 analysts on strong buy. Earnings catalyst August 26th. Best entry now, $195 to $205. Dream entry, $180 or below. Strategy 1. Covered calls for monthly income. Strategy 2. Leaps for leveraged upside. If you want to see my real trades with real numbers every week, hit subscribe and drop a comment. Are you bullish or bearish on NVDA right now? See you in the next one.